What's up, everybody? Welcome back to my YouTube channel. Of course, it's your girl, one and only, No Limit Lee, back with another breakdown on the charts for you, Jay. Every Sunday, y'all know where I'm gonna be. I'm gonna be here. Y'all gonna be with me, and we gonna, as usual, every week trying to make some money in this market. First of all, let's talk about the market, y'all. This past week was a rough one. And honestly, it wasn't even a rough one, like, because I lost money, because I actually broke even. But I only took 3 trades this week. I only took 3 trades because, like, I'm not gonna lie, like, I was not feeling like myself. Like, I was not in the zone. There is, like, a feeling you get, and I think I've learned this now over time. When you are locked into the charts, and you just know, all right, boom, like I know the points and structure, I'm in, I'm out, I'm in, I'm out, I'm in profit, you know? And I think that's kind of how it was when I like first started doing my videos. Like I was really locked in, I was in and out, holding trades, like getting out when I was supposed to, really just following and executing my trading plan. But last video, like I ain't gonna lie, like, I was just not in that mood. Like I got a pretty good entry on one of my trades. Another one of them broke even. And I didn't hold it because I didn't like how the market was forming at the time. And then the other one, I took an L. So it was just like, you know, I think after I took that L, I got a winning trade, then I broke even, then I took an L, and I was like, you know what? I'm just done for the week. I think that's always like the best thing for me to do, because if I try to trade through frustration, that's when I end up losing money and like messing up my accounts, blowing accounts, losing funded accounts. So it's like a lesson that I've learned the hard way too many times to know, like, yo, if it gets like that, like I'm gonna just take a break. And I think I talked a lot about like psychology last week, and I didn't really get to dive into it as much as I wanted to because I knew that video was gonna be too long. This one won't be as long because, like I said, I'm not going to be going over any trades from last week because they weren't good trades, honestly. And I think it's more important, honestly, with the news that we have coming up, to focus on what we're going to see this week coming up, as in after Sunday. But I just wanted to talk about like that, like being in the zone and having like, okay, I'm here and I'm ready to execute. I think, you know, most of the time, and I've always seen like more experienced traders talk about this, like, oh, like, you know, when you're a newbie trader, you always feel like you have to trade, and you know, there are times when you don't need to trade. And honestly, I used to always be like, yo, that's crazy. Like, why wouldn't I be locked in every single day trying to make money on the markets? But I realized like life still happens even when you are trading. And there are real life things that require you to kind of take a step back just so you can get yourself like emotionally more balanced. You know, for me this week, unfortunately, I had a friend pass away who I've known for a very long time. And, you know, grief is very hard. Like, grief in any form, not just like losing a loved one or a friend, but like losing a job, you know, going through life transitions. Like, there's grief that comes in many forms, and trying to, for me, trade from a place of like desperation or trade from a place of feeling of lack honestly makes my judgment really bad when I'm trying to make when I'm trying to make decisions that are based on my trading plan to execute my strategy. So honestly, that's why this week I was like, yo, like I'm not really seeing nothing that I really like. And I was like, you know what, let's just chill out this week. Let's just, you know, look and see, continue to watch how market is forming, but not really like, yo, like, you know, look for trades, look for entries. So I just wanted to tell you guys that, like, you don't always got to trade. Like, of course, money is always there to be made, but you don't always have to trade. And it's not a bad idea to take a break. It's also a great idea to take a break. The money will be there, the charts will be there, and there will always be another opportunity. That is something that I also learned the hard way. There will literally always be another opportunity. As long as the markets are on and moving, people go to their job every day, currency will be booming, people are trading, like literal trading of goods from one country to another, the markets will be here, there will be more opportunities. So that's why I took a break. I'm not mad at it. I actually really feel like it was really good for me. And now I can actually really process, like, one, those L's that I took based on my mistake that I made a couple weeks ago. And then two, really think about what I'm seeing on the charts and where the market is going, and how like all this fundamental news that's surrounding the dollar right now is affecting my pair, and what I actually need to look for. Because I don't know, we're like in some really funky times, right? I think, I saw it was a podcast with Tori Trades in Wisdom, and she said how like the market in 2020, you kept seeing like people say, oh, we're gonna be in like a recession and the dollar's gonna drop. But yeah, on the charts, like it was literally like higher highs being made. I mean, literally, we have this being over right now. So I know, 2020, this is where the pandemic happened. We had all this craziness happening, like the charts, but this is so like I know we're on the monthly time frame, but y'all don't understand how sloppy this is on the lower time frame. Like, but there's still money being made. Like, there is still structure being formed. I just remember after 2020, because the Feds dropped the interest rates to dang near zero, it was like, yo, we're gonna have a recession. You see, boom, boom, boom. This is a three wide soldiers candlestick pattern. This is what I was trying to talk about in another one of my videos. But when you see three very bullish candles, very little wicks, especially very little wicks to the downside, that means bullish pressure is coming. What happened right after we had those three wide shoulders? We had a morning star candlestick pattern, and then another morning star candlestick pattern. I mean, the market was literally telling us there's nothing but buyers in this market, right? But fundamentally, the news was saying, yo, we're going into recession, all this bad stuff is going to happen, sell. So that's kind of how I feel like where we are right now, right? The news is saying we're bullish because the economy is not doing as badly as we thought. We're bullish because, inflation is finally under control, so the Fed's are going to start cutting the federal funds rates down. But all I'm seeing on my chart is bearish candles, right? And I talked about this last week too. I was like, my bias is bullish, but my charts are bearish. So I have to keep going with market structure. So I'm really looking at how the weekly and monthly candles are responding to every piece of news that we have, right? So let me just hop over the news before we get into the chart. So this week we had the CPI inflation, and then we had PPI, which is like production inflation, right? The prices of the goods in wholesale, basically. CPI came in right at forecast. Like actual is right at forecast. Even core CPI, it looks like it came up a little higher, but like I didn't really understand that metric, and I went to Bloomberg. Also, side note, if you don't understand news, go read something like Yahoo, Market Watchers. I don't know, like Bloomberg. Like for me, I will have Bloomberg on after news like this on my Fire Stick. It's a free app, so watch it. And I'll just be watching it and see what the other experts are saying. So the economist was on there and he was like, yo, the core CPI number is actually not as crazy as you think it is because of how it's measured, right? So with all the inflation that we had from the interest rates being low during 2022, that's still kind of priced in, because I think this is on a 12-month period, the core CPI. So it's comparing this core CPI to like, what was it? This was September. So this was like August CPI compared to August 2023 CPI, core CPI. So it's like, it's pricing in things that in a way, like, how do I explain it statistically? It's pricing in things that the Fed are no longer looking at. So a lot of that data from those high inflation months are kind of seen as outliers, because that wasn't like, basically the standard deviation of how data normally comes in. So we're pricing that out just to see how, if inflation basically is moving at a steady curve. That's very statistical. I don't really know how to break that down a little bit more simpler, but I think just the takeaways is just like, it's not as crazy bullish as you think it is. It's actually just right on target with what the Fed is looking at. So the same thing with PPI. Like, yeah, there was a little bit of growth, but nothing like substantial where it's like, oh my God, it's off the charts. It's like, way out of what the Fed's projection was. I think the shocker here was that there was actually more unemployment claims between this week and last week. So I think this is honestly making the argument for the Feds to cut the rates this week stronger. So that brings us to this week. I mean, this week is pretty simple. We're looking for this. The federal funds rate. Once this thing is finally out, I think that my chart will finally give me some decent structure. We also have like strong news from Japan as well. This will probably, so when I see things like this, the Japanese time frame is usually during the Asian session. Asian session starts at 7 p.m. and I think it ends at like 3 a.m. I probably will not be holding any trades over Thursday night unless I see something on my chart that says otherwise, and it would have to be very, very convincing, because this right here, not paying attention and going to sleep with a trade open, this will slap up your account bad. And I've again learned that from experience. So come Thursday, I probably won't hold anything over, but it'll definitely again continue to show my market structure for if my pair is going to continue to go bearish, or if we're going to have a transition and see finally that those buyers come in like the markets and the fundamentalists have been saying. So that's really all I'm looking at. I know that we have like flash PMI and consumer confidence, but like I said, I think the federal funds rate will be the market decider, or the decider for my pair. Definitely going to be the market decider, but definitely the decider for my pair. And that's all really that I'm paying attention to fundamentally. When the week starts, like Sunday night, I don't think I'm going to look for any trades. I don't even think I'm going to look for any trades, honestly, till like Tuesday or Wednesday, maybe even like Tuesday night, because I know like I always say this, but the market prices in like the news data before news is released, because it just makes sense if you understand how data works. Like, you can't just do it the day of. It literally has to be timed and it's on a schedule. So I know that somewhere in those little candlesticks, I'm going to see something. If I don't see anything that's convincing enough or goes with my trading plan, a break of structure, a new high and low forming, whatever it is, I'm not going to take a trade. Like, I'm going to wait. I'm just going to see how the market forms. After 2 p.m., then maybe I'll take a trade then. But I'm not pressed for a trade, especially during the federal funds rate. Again, these are one of those CPI. It's three of them. It's unemployment, inflation, CPI, federal funds rate. Those three news events, if you do not, if I'm not like at a point of structure and have a really good stop loss where like I'm not in like a point of fluctuation where price can pull back and smack my stop loss, I'm not going to take the trades. That's just how I trade now, because I've lost money and I just had to learn lessons doing that. I know other people do. Some people swing trade it. Some people trying to think of what's it called when you do it really fast. It is skipping my head today, but like when you're in and out of a trade, basically, like I don't do that. Like, I can't hold a trade for like a minute or a second. Like, I like to intraday trade / day trade, so I like to hold it for a little bit just so I can really get my my profits out. But that's just what I'm looking at fundamentally. Let's go back to our charts here. So again, we have the monthly candle. I'm not really paying too much attention to it, but I do see that, like, again, we are so much closer to this monthly level. And honestly, with the funds rate coming up, like if the news is really bullish as they say they are, right? So that's another thing I wanted to come back. Let me just come back here. There are two things that I heard on Bloomberg that is very interesting to me. One is that a lot of people are actually pushing for the Feds to cut the rate by 50 basis points, which would be 0.5, right? As a percentage. If they cut it that much, see, the forecast is only for them to cut it 25 basis points. So if you can tell that, because the previous is 5.5, forecast is 5.25. So that's 25 basis points. If they cut it to 5, so that would be 5.5 to just 5%, at 50 basis points, we will see even more buyers be into the market. So those are the two things, right? So I know that they're planning for a 25 basis points. This is something that they've been talking about, like, I want to say like 2-3 years ago, when they were already starting to raise the rates to slow down all of the buying and the strong bearish and the strong bullish and strong inflation that we had on the dollar. They already planned that they were going to do some price cuts. They planned for 2 this year, but I think this might be the only one, depending upon, again, how the market reacts. So that's something that I actually do want to see. Either way, I still think like probably around Tuesday, Wednesday, we're going to have some kind of touch of this monthly key level. And that might be the time when it's like being set up for us to get in a nice buy for like the transition and take this up. But if not, if it's bearish, if they don't cut the rates at all, because who knows, right? I see us breaking this level of support and probably just continuing down to maybe something like this level of support for the bearish, the sellers to continue, honestly, with their pressure. So we'll see. This is 15 days. We have 15 days left in this candle though, so not really pressed to see really what's going on in that time frame too much. We are pressed to see the weekly though, because we had that nice bearish engulfing candlestick pattern I talked about. We had a retest of that last form of support that was formed by this bearish bullish candle. That shows that the buyers were exhausted. Most of the sellers were ended up here and push price continue to go down. So again, I'm still seeing like, price push towards this monthly key level. So I'm really going to be eyeing this. If I do want to take a quick sell before I get that news for the federal funds rate, my TP and my target will be out here. Keep in mind, as we go to the daily, this green line right here was my original TP for those entries that I had here, right? But we had that strong pullback. I said that we might, have an early reversal. It ended up just being a test of support, made another lower high, and then it's continued down. So I might still see, let's see if this thing gets tapped. If it does, it will teach me something for next time, that I just gotta honestly stick to the bias and really wait this out. I have never really had to wait out a trade this long. So again, learning point. I'm glad that I'm actually recording this, because I need to watch this back and really tell myself this later. Like, this is really good though. We're still seeing lower highs form on the daily chart. So again, I'm still sticking with my my sells for right now. I'm not gonna counter trend trade. I've tried. I got slapped up. That's why I took those L's the other week. So still pretty good. We're still in a pretty good position, honestly. Like I said, we just gotta see if the market wants to come down more, break this, create a higher low, whatever. Don't really know until the federal funds rate. So I always just still like to see C2 or H4. H4 gives me a lot more detail based on the daily to see what's happening. And you can see again, like we still have just lower highs forming. Like this is all from this week. Another lower high, support, lower high, so I'm guessing again, another lower high, break support, just continuing down until we get to this monthly key level again. And then we'll start looking for entry. So I know this video is probably a little bit more wordy than it is like technically, but that's what the market is giving right now. And honestly, I'm in a waiting period. I'm in a patience period. There is times when you need to be in execution mode and go and execute, and trade and be in and out. And then there's also times where it's like this. It's like, okay, well, I don't really feel like super comfortable on some of the positions I've been seeing. So I'm just going to really just kind of chill out, sit back, really watch what the market's doing, try to understand, because honestly, that's how you save your account. And I feel like in the long run, it's those periods of patience that saves you a lot more money in the long run. And that's really what I'm trying to do. I'm trying to be more like, approach this more like a business, like not rush into things. Like I'm really trying to grow on the psychology side, because I really understand the technicals. Technicals actually became really, really easy to me, but keeping your emotions in your head while the numbers are moving and having to make decisions in split seconds and still sticking to your trading plan it's actually very hard. It's emotionally taxing, but I've been getting a lot better at it this year. and I just want to keep learning, which is also a part of why I started doing these like mini little docs, or like I like to call them my weekly breakdowns, because I do them anyway, but it's good to have it out and seeing if somebody else can find value in it too. So that's really all I have. I think, the last point I did want to say was, like, in these kind of weeks when you are just trying to be patient, watch the market flow, these are the times actually when I actually either rewrite or refine my trading plan. And when I say by rewrite and refine, like, I go back through it and see, like, if I'm actually following these steps. Are these steps that I created actually working for me and the type of market that I'm in? And if not, I make some adjustments. Or, like, if there's certain exceptions to the rules that make sense, I'll write it into my trading plan. So that's also something I'm going to be doing this week. It also just reinforces, like, my way of thinking when I'm looking for entries, when I'm looking to exit, when I'm holding trades and I'm managing. Like, it's important to always have that just in your psyche and repeating it over and over again. It's like muscle memory, but, like brain muscle memory in a way. So it's like you got to approach these things sometimes like how athletes approach practice. So that's really all I have for this week. We're just going to sit here in a nutshell and watch the charts, show it's what it's working with, wait for that funds rate decision to come out, and then we'll see how the market reacts. And that's really all I have this week, guys. Thank you, as always, for sticking through the video, learning with me, trusting me with my rambling and everything that I'm saying on the charts, but also just, being here along with me for the journey and growing as a trader. As always, guys, like, if you like the video, like, comment, subscribe, send it to a friend, invite a friend, get the notifications every Sunday. I might start doing some new videos in the future. We'll see, because I'm still trying to relearn how to edit and all that stuff too. But other than that, guys, hope you guys have a great trading week. Be blessed and stay safe. Bye, guys.